please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning, welcome to Morning Call. I'm Lata Venkatesh and with me Surabhi and Anuj. We are meeting after a rather long break, something we have become unused to. How are things placed? Actually, things are placed very positive as far as the global markets are concerned, especially from the United States. The Senate has approved a large budget and that gives hope that the tax reform steps will also be passed. The global markets actually already reacted to it. At the moment, there is a little bit of red on the Asian screen, but largely Wall Street cues have been very positive. The point is, all this has not really helped us all these days. What do we have in terms of domestic cues? My own sense is we're getting positive news from Hero. Hero told us that they have sold the 7 lakh bikes on Dhanteras Day. We have positive news from Dr. Reddy's that they will be able to launch that contraceptive drug. HUL, in the sense Unilever's management tells us that they are positive on India, that the GST blues are over. GST, actually, Mr. Adya himself says that a good recast is needed of rates, which means like the markets will obviously discount all this positively. And my own sense is the market may have reacted a little more aggressively than needed for even the Axis numbers. I'm not saying there's no negative news. The MPC minutes were hawkish and ultimately there are 2 big bank results as well this week. So the market would be cautious, but my sense is that the negativity played out on Diwali day. That's my hope at least, which is why I am in all green today.
Fabulous. Well, Lata, good morning. In fact, I will come back to the banks because we can't get away from that reality in just a moment. But yeah, I think you said it, after a very long time, did we have a 4-day trading break? Absolutely. So I think traders and market participants.
Since 1995, if I can remember.
It felt a little like, the Christmas week because a lot of global markets get their time off. This time, at least, we got lucky during Diwali. Anuj, good morning. So how do you read things now? Because Lata sort of listed out a whole number of positives. The only big counterweight to that is what's happening with the banks, right? Can the market move on regardless?
Morning, Surabhi, morning, Lata. On Muhurat Day, I didn't feel like, that the market was enjoying a break. I don't recall. I mean, I've done so many Muhurat shows. I've been part of so many Muhurat shows. I don't recall since 2003. I mean,
1997, I finally figured out.
Okay, 1997. That was the time I was, just a student of the market. Still in college. I think had just entered college. So, look, the point here is that we have to respect what the market is telling you. And I take Lata's point that market may have overreacted to Axis Bank, but that's market for you. It will overreact on way up and on way down as well. Right now is a way on way down. Look at what the market has done this month actually, and I just want to take stock of situation. The Nifty is up 3.7% this month. The mid-cap index is up 3.8% this month, and this is despite the Bank Nifty actually falling. I mean, this really is remarkable strength for the benchmark index that despite the largest component actually going down, the market has still moved on. And the reason for that is that IT and Pharma have the Bank Nifty doing what it is doing. Reliance is up 17%. Can Reliance continue to move up like that? I think that's a big question if the Bank Nifty continues to underperform. And of course, Bharti Airtel is up 22%. But look at the 3 ones, the red ones. Axis is down 10%, ICICI is down 7%, and SBI is down 4.4%. Now, these 3 stocks count for a lot on the Bank Nifty, and these are all similar stocks, right? I mean, the corporate-facing stock. So that's where the problem for the market is. I think we're now in a bit of a dichotomy where the bulls would want to buy the dips on Nifty and bears would want to sell the rally on the Bank Nifty. And I think both trades could work out in the near term. It doesn't look like the Bank Nifty's underperformance is going to end soon because structurally there's a bit of a problem, and sellers would want to sell on all rallies. The Bank Nifty is below its 20, 50 and 100-day moving average, which is interesting. Does it go to 200-day moving average, which is another 1,500, 2,000 points from here? The Nifty, though, has made a floor and, higher bottom at around 10,000. That's also its 20-day moving average then. So I think we now need to focus on the non-Bank Nifty heavyweights, mid-caps. They can help the market. On the Bank Nifty, I think this earnings season, because this fresh negative which has come and the market was not prepared, maybe some more downturn is left on the bank Nifty.
Okay, absolutely take that point. So Lata, coming back to the banks, I guess the next thing that people want to figure out is that if this was an Axis-specific problem and then therefore it can be contained, or whether that spillover is going to show up in you know, banks like ICICI Bank as well, I guess.
See, the answer is yes and no. A bit of Axis's numbers, you know, the one big steel company they spoke about. I don't want to mention the company because I've written to them and I'm awaiting a reply. So for the moment, I'll only say that company, there is exposure for that company even in HDFC Bank. So let's wait and see, you know, just because one loan is regarded as a divergence doesn't mean all loans have to be. It could be a specific 525 project loan in that company which has been regarded as a divergence. The overall corporate exposure may not be. So, you know, we can't jump to these conclusions. That's one point. But the more important point is Yes Bank's inspection is not even over. So, while Yes Bank's numbers will come out on Wednesday, so tomorrow we have HDFC Bank, day after tomorrow we have Yes Bank, where the inspection is not done. So, we don't know, and I don't think Yes Bank has exposure to that steel company. But the fear for the market is that once there is divergence, there can be divergence in others also. Why only 9? It could be 15. So that fear will remain, but for Yes Bank, that fear has got to be postponed. Only when the next results are announced, we are going to know what RBI has found. And finally, ICICI, this is over. The inspection is over. So there we will have to worry. And there the bigger worry is actually the telecom company. Videocon. I mean, there I can tell you because it's known. Data Bank has already declared it. Now we don't know whether RBI will regard it as divergence, whether it will not regard it as divergence. As well, the market knows that about the exposure of ICICI Bank to Videocon. So there may not be any fresh reversal, which is why I went with the fact that since ICICI Bank's exposure is known and Yes Bank is, you know, we are not going to get any divergence news simply because the inspection is not done. Just maybe for the moment, the reaction is over.
Okay, well, all said and done, I think we have to brace ourselves for some lumpy NPA numbers as and when these banks report numbers. Well, on that note, let's move on and take a look at what our wise experts have to say going into trade this morning. Chris Wood of CLSA says greed and fear remain a long-term bull on India, as reflected in the nearly 3 times overweight in the relative return portfolio and the 54% weightage in the Asia ex-Japan long-only portfolio. But he also says greed and fear has to admit that there is the potential for some short-term vulnerability and at least relative underperformance. He says it is certainly evident what has been driving the stock market so far this year, with the Sensex up 22% year to date, the accelerating flows into local equity mutual funds. Chris adds the lack of an investment cycle and the related lack of loan growth are directly linked to the ongoing asset quality problem. The Indian banking system, which remains the main unfinished business of the first Narendra Modi administration. So he's been a long time Modi bull, but even he acknowledges the banking woes.
No, that point is taken. I would also say if you have to draw up a report card of the Modi government, which we will all do in you know, maybe 18 months from now, PSU bank reform would be one area where they've perhaps performed in every other gamut. Let's get you money market views. Praveen Brahmabhatta Veracity says the rupee will trade with a negative bias on the back of negative cues from domestic equity markets. He also expects the spot USD INR pair to trade in the range of 64.80, 65.20, and we won't call that bad news.
Okay. Well, moving on, Ajay Manglulia of Edelweiss says the domestic sentiment is expected to remain subdued as the bond market opens after an extended trading break. He says the US Treasury yields have witnessed upward pressure towards the end of the previous week, and this might have a rub-off on domestic yields at open today. He says the 10-year benchmark bond yield is likely to trade in a band of 6.74 to 6.79%.
And maybe I want to add a little bit. If we can pull up the Monetary Policy Committee graphics. The minutes came out, and after that the bond markets have not traded. They came out on Wednesday. And there one noticed a little bit more. See, even the MPC statement was the original statement itself was by no means a dovish statement. But one just thought that the governor seemed to use words which would make the market think that this is a neutral to hawkish statement. He referred to upside risks to inflation a couple of times. He used the word vigilant. Now, that's something which a lot of people would be a little worried about. Yeah, he speaks about inflation not going below a further point. Use the word like vigilant with respect to fiscal and external risks. Now, that is normally used as in a very extreme circumstance. Viral Acharya also said that we must remain focused on the 4% CPI. So, for the bond markets, aside from the fact that US bond yields went up by about 4 or 5 basis points, this will be an added minor negative for bond prices, and therefore about 5 basis point higher yields or 4 basis point higher yields is also likely, which also is negative for banks.
Okay, let's discuss global cues then. By the way, I just want to make a point that the SGX Nifty is indicating a 40-45 point gap up. Two reasons. One, while the Nifty spot you saw 10,146, the actual closing was 10,123. It's the adjustment which brought it to 10,146, and the futures closed at 10,146. And we had trading yesterday as well, so 40 points gained yesterday and about 19 right now. So about 50 point gap up, or 40 to 50 point gap up is what the SGX Nifty is indicating. But over to Ronit for the world view.
Yes, so all three US indices hit record highs, and this is becoming the new normal. And to put things into perspective, in 2017 alone, there have been 32 new record highs in S&P compared to only 13 in the 2000 decade. Now, one of the reasons for this record high is the Senate approved the $4 trillion budget. So this paves the way for the tax reform highly anticipated by the Trump government. And finally, the stock of the week was General Electric. The stock recovered 6% of its lows, largely because it gave a really bad set of numbers, but the investors anticipate that the worst is over and only good things should go forward. Now, moving on to Europe, European markets also closed in light green. Largely, and the stock of the week was Volvo because it closed higher on highly good numbers, and it reported a top line of 9.4 billion versus estimates of 9.2 billion. Moving on to Asia, green cues as usual. The Nikkei outperformed because Japanese PM Shinzo Abe's ruling coalition secured a two-third majority. And what this does is this will help them in continuation of the easy monetary policy. Back to you.
All right. Ronit, thanks a lot for that. Yes, Shinzo Abe winning big, and that's helping the Japanese market as well. Jeff Lewis is with us now to discuss the trade setup and the overall global setup as well. Jeff, good morning. Extremely low volatility phase, something that the market hasn't seen for a long time. Do you think it's building in too much complacency? Is the market looking a bit vulnerable to a major global shakeup?
Well, I don't myself think that a low level of VIX is actually a very good predictor. It has pretty low predictive power as to what's going to happen in the markets in the immediate future. I think we've had a lot of good news, but as long as the global economy continues to do well going into 2018, as long as inflation remains low and we don't see a strong backup in US Treasury yields, then I think the market does have pretty strong support, even at these somewhat rich valuation levels. So absent any external shocks, and we've had some good news on the policy front with Mr. Abe's victory in Japan, and also with things going quite well, I think, for Xi Jinping in China. So politics is looking a little bit better. The economy is doing well. Valuations are rich, but I think the markets are reasonably well supported at the moment.
Actually, good morning, Jeff. My question was to be at the exact opposite of what my colleague asked you. Are we going to see a little more of this rally continuing now with the Senate passing that massive budget and hopes of a tax reform now looking brighter?
Well, it's certainly a positive, I think, in that looking at various baskets of stocks, I think Trump's tax reforms were not really priced into the market. There's still a long way to go. Passing the budget resolution means that tax reform can now go through the reconciliation procedure, only needing 51 votes to pass in the Senate. But, of course, it's still quite a long way. I think with the midterm elections coming up, I think there's going to be extra urgency now in the Republican camp to actually get some meaningful changes through. So we're quite optimistic. But for me, the thing that's really driving the equity markets is not U.S. Tax reform. It really is the strong global economy.
Jeff, for India, foreign investors have been selling down India for many months now. Is that just a tactical valuation call and a shift? Or do you sense some sort of problems for India, which is why we're being left out?
That's a very good question. been some foreign selling. It hasn't been huge. I mean, it's still net positive year to date. But I think India really has been suffering from the short-term problems we've seen on the growth front due to the teething problems of GST and the lagged effects of demonetization. And that has meant that India's relative earnings position has suffered. We've seen more downgrades, whereas other the upgrades. I think this is a short-term phenomenon. I don't think we're going to see a huge amount of foreign money coming out. And at the same time, also, foreign money is still going into the Indian debt market. It's still a very attractive government security market that you have in India. So I see this as temporary, but we need to see some signs of the economy picking up a bit and improvement in earnings upgrades.
Okay. Yeah, we hope that this earnings season will give us that. Thank you very much, Jeff Lewis, for joining us with your thoughts this morning. Okay, so positive global cues, but local markets still perhaps have to prove their mettle in terms of earnings.
Okay, on that note, we'll take a quick break. We'll come back on the other side with the CNBC TV18 list of top 10 stocks that should be on your radar this Monday morning. Welcome back. So we're looking at a little bit of green on the SGX Nifty, but for now, let's get down to stocks, and we've got our top 10 list of stocks as always ready for you, and our entire team is standing by. Guys, good morning, everybody. Welcome back after the Diwali break. It's time to get started. So Anuj, let me kick things off with you. What's on your radar?
You know, Surabhi, as they say, don't fix something that's not broken, and I think let's go with that. First is Hindalco. I think Manisha will also talk about it, but third consecutive month of cut in China output. And I think the stock's corrected a bit from the highs, but it's still the strongest metal stock and near 52-week highs. So I won't be surprised if it's if it hits new high today. And the other is Bharti Airtel. You know, been talking about it for some time now. But, you know, it's broken a 10-year bear market, and we're just comparing. What kind of valuation you would want to give Bharti Airtel if you want to apply the same metric to Reliance Jio and give Reliance the sum of the part valuation, then why not to the largest incumbent player? And I think the market's really reading that, and that's why you're seeing this fresh breakout. It's up 21% this month, and one thing that you don't do is bet against the stock in momentum in expiry week.
Oh, absolutely. I mean, and take your point that even the Reliance Relgio offer indicates that further freebies will perhaps not come. It's the freebies has been tweaked, has been lessened, and that's also working positively. Okay, but another big stock of the morning could be Hindustan Unilever. Mangalam here to tell us why.
Absolutely, Lata. So over the weekend, we got numbers from the global parent Unilever PLC. They were a good set of numbers, especially in the emerging markets pack. And what was actually the happiest part for Indian investors of HUL was that the company said volumes in India actually picked up post-GST implementation, and that was a sentiment which was echoed by the company's CEO, Paul Polman, as well. He said that he saw signs of improvement in both India as well as China. Price growth was limited given the price cuts post-GST, but remember, HUL reports its numbers on Wednesday. We're working with a 4-5% volume growth. Let's see whether the company goes ahead and posts, but before the numbers, some positive commentary coming in from Unilever PLC.
Absolutely. Thanks, Mangalam, for that. It was nice to hear a big global giant saying that after GST things are stabilizing and in fact doing pretty well for their global portfolio. With that, let's move to Pharma. Ekta, good morning. What should we watch out for with respect to Dr. Reddy's today?
Well, I expect Dr. Reddy's to actually be in the green. Overnight or over the weekend, what's taken place is that basically a US court has ruled that the patent for a device/drug called NuvaRing, which is used for contraception very popularly in the US, is actually valid. Now, this particular patent is expiring on April 8th of 2018. Why this is positive for Dr. Reddy's is because Teva is now cannot have 180-day exclusivity on it. That means that most of the filers, once they get US FDA approval, including Dr. Reddy's, can launch in April 2018, as opposed to Teva launching earlier and getting 6 months exclusivity, and hence the competition becoming more intense for Dr. Reddy's. So that is the reason why you should probably see Dr. Reddy's in the green. It's around a $780 million branded opportunity right now, and Dr. Reddy's can make around $120 million annually if in case things work in their favor. But again, it's a bit of a procedure. There'll be appeals approvals, etc., and you have to eventually get USFT approval for it as well.
Fair point. All right, that will be a 780 million total, you said. Okay, and if there are a few contestants, then I guess, yeah, 120 million makes sense. Okay, Naveen, you have the two-wheelers on your radar. Hero Motor, I'm sure, is good news.
Yeah, Hero Motor is a good news. This Bajaj Auto, bit of a negative for the company. Now, what is happening for Bajaj Auto is that Sri Lanka, which is again one of their significant markets, over there we are getting reports that the Sri Lankan government is planning to restrict the imports of three-wheeler commercial vehicles. Now, how will that be an impact for Bajaj Auto? Remember, Bajaj Auto sells around 25 to 30,000 three-wheeler vehicles to Sri Lanka every year, and this is around 9 to 10% of their total three-wheeler commercial vehicle exports. Not a very big negative for the company, but yeah, niggling worry in the near term. The other one, that is Hero MotoCorp, we expect the stock to be in green. Why? Because remember, on Dhanteras, the company has sold around 3 lakh units. That is what the company has come out with the notification. And they believe that in the month of September, remember, the company had already sold 7 lakhs, and there has been a steady growth of almost 9% on a year-to-date basis. So going ahead, we expect October numbers to be strong at the back of this sales in the month, on the Dhanteras day. Back to you.
Okay, thanks, Naveen, for that. Let's go across to Ronit now for some more stocks and news.
Yeah, so Anuj, 2 stocks on my radar. First, HCL Infosys. The board approved a 499 crore fundraising via rights issue. The rights issue will be around 47 rupees per share, and the ratio will be around 10 rights equity shares for 21 equity shares held. Next, move on to Mahindra Lifespace. The company partners with HDFC Real Estate Fund for their affordable housing project, and this is the 3rd affordable housing project by Mahindra Lifespace. Back to you.
Okay, that's short and sweet. Thank you, Ronit, for that. Well, let's see what kind of commodity cues we are getting for equity trade this morning. Manisha is joining in. Good morning, Manisha. How are those metals doing?
Well, very good actually. The metal prices have done well. The last week was a good one, and you have the nickel prices still holding around 6-month highs, and that really is leading the rally in the metal space. Remember, the steel output cuts, the aluminum output cut is something that has led to the prices on the higher side. This actually would be a 3rd straight month that the Chinese output for aluminum also has declined, and that is what is weaving its way into the prices. Add to it the fact that the demand from most of the Asian and the Europe markets continues to be good. The US home resale numbers have been on the higher side post those hurricanes. So everything that's coming in sense of events and data, especially for the metal space, has been bullish for the sector.
Okay. All right. Thank you for that, Manisha. Let's do a quick recap then of the top 10 list for the morning. Stocks expected to gain are Bharti Airtel, HUL, Dr. Reddy's, Hero Moto, HCL Infosystems, Mahindra Lifespaces, and metal stocks like Hindalco, Tata Steel, as well as Vedanta. Stocks that could see some pressure today are Bajaj Auto, as well as oil marketing companies, IOC, BPCL, and HPCL.
Maybe a little bit of pressure even on the paint companies. After all, they've had a very good run. But we'll get to know about that. Let's get you some more opinion. It was a subdued start to Samvat 2074, but the year itself, the past year itself has been filled with gains, and liquidity continues to fuel trade. On Diwali day, we caught up with market veteran Ramesh Damani, who says he will bet on the QSR theme, the quick service restaurants theme, oil marketing companies, as well on gaming and casino stocks. So here's cheering up the mood with Ramesh Damani.
Liquidity trumps valuation sometimes within a bull market. I think clearly, as everyone has argued, that valuations are excessive compared to their earnings, but it was liquidity that held up this market. You had shocks in North Korea, you had problems of Fed raising the interest rate, you had problems of earnings, and despite all of that, the market held up and in fact closed at the highs next to Diwali. So this gives me some thought that sometimes within the bull run, liquidity is of paramount importance. We've always heard that liquidity is the mother's milk of a bull market. I think we're seeing good expression right now of that. Some sectors of the economy are doing very well. I think we're shifting from a huge unorganized economy to an organized economy. And I think it's a bit of la-la land thinking to think that it would not cause trouble to the economy. So I think that is slowly getting ironed out. There's some sectors like auto, OMCs, which continue to do well and continue to, perform good earnings out there. The rest of the market will have to catch up. And like I said, the next 6 months are perhaps a good litmus test whether the market's earnings are catching up with the valuations. If you look at those gaming casino stocks, they are at fairly cheap valuations relative to their potential. So they will do well. And a theme that I've explored with you previously, the quick service restaurants. I think over the next 4 or 5 years, these are almost bulletproof businesses that are not affected by technology. And I think the incumbents will have a huge advantage in these business because people will want better standards of living, better entertainment, better relaxation modes. Those look like good bets for the next 5 to 10 years, which I would populate for a young person. But if you want Samvat to Samvat, I think OMCs will probably do well. I think they are on a very high earnings trajectory. Dividend payouts are very good. So I have all reason to believe, and there's been a volume explosion in terms of petrol, diesel, which has been missed by the markets. So I think, you know, on a Samvat to Samvat basis, OMC look good to me.
Okay, so that's Ramesh Damani with a couple of ideas for the new Samvat. On that note, we'll take a quick break. On the other side, our technical experts joining in, as always, Ashwini Gujaral, Sudarshan Sukhani and Mitesh Thakkar on how to get ready for trade this week.